and gentlemen, representatives, esteemed judges, and distinguished guests. Welcome to the CFA Institute Research Challenge, Season 8, 2025-2026. It is my privilege to serve as the MC for today's event, and I am delighted to guide you through the prestigious competition. Today, we gather to celebrate the dedication, hard work, and expertise of our talented participants as they present their meticulously researched recommendations. Their commitment to the field of finance and investments are both inspiring and commendable. Before we commence with the presentations, I kindly request everyone to stand up for the national anthem. Thank you. Please. Before commencing our next agenda, we would like to pay our utmost appreciation to Royal Group Phnom Penh SEZ for accepting to be the subject company for this year's challenge, especially Mr. Phong Nivai, Mr. Phang Nam Wong, and Ms. Boravi for your support to students and our team during the whole challenge. I would like to invite Madame Rotana, representative of the CFA in Cambodia, to represent some gift for PPSP. And I also would like to invite Mr. Phong Nivai to come up the stage to receive the gift. To officially open our competition, it is my honor to introduce Mr. Bae Hong-soo, Vice Chairman and Chief Operating Officer of the CSX, to share his insights and open the competition.
Highly promote idea. invest area
Thank you, Mr. Bear, for your insightful remarks. Next, I would like to welcome Madame Ratana Puri-Colabot and Mr. Alex T, representatives of the Cambodia community of investment professionals and the organizer of today's challenge, to provide a few welcome remarks to our guests of honors and the overview of the competition flow. Madame Ratana and Alex, the floor is yours.
Another year. Else. Times the worst. Global capital. The need for minded in this context and firmly the truth. And once again, everyone be advice. But let me ask tonight.
this company, this healthy advisors, well, my name is Alex, and I representative of the Cambodia Community Investment organized the round of. I'd like to take the opportunity to thank firstly would be security exchange platform value. And of course, our participating universities, particular order, American University of Phnom Penh, MN Business School, NUM International College, last but not least, Paragon International University. Thank you very much. A big round of applause for all our participants. Today, we will go through a few things first before the final presentations. We will go through the format of the research challenge. Thereafter, we will go through the introduction of the judges, 5 quiz judges here today. Thereafter, we will go through briefly about the rules. All the participants had already been briefed. Overview about the rules. Thereafter, we will have the presentations. B, A. So the judges will already have the presentation materials before them in hard copy. Last but not least, we will have a short feedback on team reports through photo towards the end of our. The CFA is a worldwide where universities are invited to send their best equity analyst students to participate in this challenge. The unique competition because it is an opportunity for students to work together with industry professionals in terms of preparing a research report organized by a local CFA. In Cambodia's case, it will be the Cambodia Community of Investment Professionals, which is a CFA society. The winners of the competition will represent Cambodia to the Southeast Asia sub-region. Last year, we had Canada 7th edition. Team, some of them are here today. We encourage them to be actively involved in the community, and we are grateful that we passed for alumni. Judges for today, we will have firstly Mr. Dara, Chief Risk Officer of Maybank Cambodia. May you rise to be acknowledged. Second would be Mr. Mark Selby, CFA, Director and Head of Climate. Thirdly, Ms. Mui Keng Long, CFA, Investment Officer of EMIA. Fourthly, Mr. Soti Sam from NBC. Fifthly, Mr. Steven Satyam from STSK Investment. Of course, as I mentioned earlier, we have 4 teams participating today. So the first team in alphabetical order would be American University of Phnom Penh, who was mentored by Ms. Sophie and advised by Kemet Business School was mentored by William Protes, advised by Mr. Mahaji. NUM International College was mentored by Ms. Sotia and advised by Mr. Pat Beck. Of course, Paragon International University was mentored by the Anantkau, advised by the Itapani. So today we will have Royal Group Phnom Penh Special Economic Zone as our subject company. Students will be allocated 11 minutes for their presentation. Q&A will be for 12 minutes and 5 minutes for feedback from judges. Of course, our results will be announced on the 4th of February 2026. Weeks from today. In terms of the presentation scoring, we will have 20% for financial analysis, 20% for valuation, 10% for environmental, social, and governance, 20% for presentation. Q&A will be 20%, team involvement and materials will be 5%. Of course, the students have already been informed about the scoring criteria, so it is paid for the information of all attendees. We of course are very thankful and grateful for our subject company for this year, Royal Group Phnom Penh Special Economic Zone. We have to thank the management team of the Special Economic Zone for supporting us throughout this entire journey for this year, as well as for our previous edition, our challenge. Last but not least, good luck to our students. Thank you very much.
Thank you, Madam Ratana and Mr. Alex, for the comprehensive overview. Ladies and gentlemen, representatives, esteemed judges, and distinguished guests, it is my honor to officially declare the CFA Institute Research Challenge Season 8 2025-2026 open. Let the competition begin. So I now invite Team B to the stage for their presentation. The remaining teams, please proceed to the waiting room with our organizers. Team B, the floor is yours. Best of luck.
Hello, testing. Great. Two, one. Honorable judges, esteemed investors, ladies and gentlemen, hold up. Before we rush to our buy or we are constantly with the sell, it is worth passing the question whether the risk reward right now is truly compelling. We're from Team B, and today we present to you our analysis of Royal Group Phnom Penh Special Economic Zone, or as well known as PPSP. We issue a whole recommendation with a one-year target share price of KHR 2121, representing a 3.98% upside, representing from December 25th, 2025. Our recommendation is built on three key catalysts. First, unprecedented border situation affecting growth prospects. Second, capacity constraint due to the growth maturity phase. And third, stable baseline demand and recurrent income provide downside protection. Founded in 2006, PPSP is Cambodia's second largest SEZ developer, headquartered in Phnom Penh. It operates 3 strategically located SEZ, including the fully mature Phnom Penh SEZ, Kandal SEZ, and Poipat SEZ. PPSP revenue is split between the non-recurring land sales and recurring income by rental income complemented by service rendered and construction contracts. With over 500 hectares of land and 118 tenants from 15 countries, PPSP generated $1.9 billion in export in 2024, representing around 7% in Cambodia total export. Dear investors, due to the significant drop in land sales and a steady rise of rental income, PPSP is now focusing on rental recurring revenue, especially build-to-suit factories. Unfortunately, Poipat SEZ, a critical key component of PPSP future expansion strategy, has been disrupted by the border uncertainties. And the negative narratives surrounding the situation also affect investors' confidence toward Cambodia as a whole. This underpins PPSP forward strategy in diversifying its tenant base and focusing on land acquisition within the 2-hour areas of Phnom Penh. And recently, the group also explored an Aker Industrial Park study in Kampong Thom. Dear ladies and gentlemen, zooming out to the macro environment, the restrictive global interest rate continued to suppress consumer demand in PPSP export market, leading to a slower tenant expansion decision. However, under China Plus One strategy, Asian continue to attract manufacturing relocation, and Cambodia labor cost advantage support long-term SEZ demand. Plus, Cambodia economy with the ongoing infrastructure also support and position as a PPSP with the advantage in location and also long-term utilization. Taken together, there is a limited downside and limited upside, leading us to a whole recommendation, which is the most prudent investment decision.
Dear judges, Cambodia's SEZ market is structurally concentrated. Despite 58 registered zones, nearly half of exports are generated by only 2 operators, with PPSP contributing to around 20%. Barriers to entries are high, but competing rivalry remains elevated as competing SEZs compete for the same tenants. PPSP benefits from a prime Phnom Penh location with access to ports, expressways, and the Southern Economic Corridor. With a strong multinational tenant base and market position, we view PPSP as well-positioned operationally, but with limited near-term upside.
Judges, investors, ESG is where this upside can be built. PPSP score arrived at 6.9 out of 10, supported by green infrastructure and strong compliance system. Under the environmental prospect, PPSP has a dedicated water infrastructure and has issued a CGIF green bond worth of nearly $10 million to support the upgrades of this infrastructure. However, the gap remains within the decarbonization, as the energy has still generated through grid electricity, fossil fuel plant, and limited solar panel, and there's no such disclosure on greenhouse gases and its solution. Socially, PPSP is building a strong community with a good track record of social responsibility since 2009 and a recent donation to displaced civilians due to the border clashes. Strong retention is their strength. However, there's a main gap in gender diversity within the workforce and labor disclosure transparency. With a score of 3.4 out of 5, PPSP governance is strong and committee-driven. However, due to a concentrated shareholder structure, it leads to the risk of minority shareholder of the group. With that said, PPSP has still room for improvement, such as a greenhouse gases reduction, more consistent disclosure, and a higher board independence that would enhance the overall score of ESG as a whole. Now let's crunch in the numbers.
Judges, investors, ladies and gentlemen, having reviewed the ESG initiative, we now turn to the financial performance. So this is linked with our third investment thesis, stable baseline demand as downside protection. First, let's take a look at revenue and profitability. So among the 4 PPSP revenue streams, land sales is the largest and most volatile revenue contributor, generating KHR 194 billion alone to the total revenue of 2023. However, in 2024, the overall revenue softened due to fewer land sales, while service and rental provide a more recurring and stable contribution. Looking ahead, we project the revenue to grow on an average of 5.5% mainly driven by rental income, which is expected to grow at approximately 4.5% annually. This reflects the gradual shift from high-margin land sales to a more predictable revenue stream. On profitability, margins peaked in 2024, supported by operating leverages and one-off income. In 2025, these margins are expected to normalize as these temporary factors fade. From 2026 to 2030, profitability margins are expected to grow modestly, indicating sustainable and improving profitability rather than a short-term margin expansion. Judges, investors, ladies and gentlemen, we now turn to debt leverages and capital structure. PPSP maintained a conservative balance sheet with debt to equity falling from 0.31 times in 2020 to 0.26 times in 2024, while debt to EBITDA declined sharply from 4.08 to 0.48 times. This demonstrates the operational earnings can comfortably cover debt obligation, minimizing financial risk and supporting long-term stability. Finally, onto the returns. In 2024, PPSP recorded an ROE of 5.68% and an ROIC of 6.15%, both below peer averages. This reflects the capital-intensive nature of special economic zone development and the upfront infrastructure investment rather than operational weakness. Judges, investors, ladies and gentlemen, overall, PPSP offers stable revenue stream, sustainable profitability, and conservative capital structure, which limit downside risk. However, with return constraint and growth mainly driven by stability rather than acceleration, this lacked the catalyst to justify a buy or the structural weakness to support sell, which is why we maintain our hold recommendation. To further assess this stability, we now turn to valuation.
Judges, investors, ladies and gentlemen, let's shift our focus to the valuations. Our team value PPSP using a discounted cash flow approach based on free cash flow to equity. By using the capital asset pricing model, we arrive at the cost of equity of 14.01%. And for our terminal growth rate, we apply the conservative 3.94% based on the weighted of the projected GDP growth rate and inflation rate to ensure that our valuation remains sustainable and realistic over the long run. With these key input, we arrive at the target share price of KHR 2,121 compared to the closing price of KHR 2040 suggests a modest upside of 3.98%. And to test the robustness of our whole recommendations, our team also conducted the sensitivity analysis. Assuming one variable changes at a time, for our recommendation to shift from a hold to a buy, the cost of equity would need to decrease by at least 1%, and the terminal growth rate would need to increase by 2% or more. In addition, we also performed the bull and bear scenario analysis. In the bull case, assuming 3% higher growth rate across all the revenue stream, the valuation show an upside of 27.06%, and in the bear case, assuming 3% lower growth rate across all the revenue stream, it show a downside of 16.84%. Relative valuation also support our whole recommendations. When we compare PPSP to its peer, PPSP is trading at an EV over EBITDA multiple of 5.2 times, slightly above the peer median of 4.9 times, while its PE ratio of 9.9 times also exceed the peer median of 9.0 times. As a result, both relative valuation multiple indicate that PPSP is trading at its fundamental value with an EV over EBITDA multiple and PE ratio yielding marginal downside of 0.27% and 3.32% respectively. Dear judges, investors, ladies and gentlemen, consistent results from the DCF and relative valuation indicate limited upside, leading us to reaffirm our whole recommendations.
Dear judges, while we maintain a whole recommendation, it is important to highlight three key risks that could affect near-term performance. First, earnings volatility remains a core operational risk. PPSP revenue is still heavily driven by land sales, as seen in the sharp decline from 2023 to 2024 as land sales decrease. Second, execution risk on expansion projects. PPSP growth outlook depends heavily on the successful rollout of Boy Bite Phase 2. However, following recent border tension, geopolitical uncertainty, and limited capacity, PPSP is introduced to a variability that could affect short-term performance. Third, external exposure to trade policy and competition. Any changes to tariffs or trade policy, as well as the entrance of new SEZs developers in Cambodia, could all affect PPSP growth. But overall, PPSP is well aware of these risks and are implementing mitigation strategies such as transitioning to a recurring revenue model, diversifying its tenant base, planning new land acquisition, and strengthening its market position through attracting global brands, utilizing its current tenants' reputation.
Judges, investor, ladies and gentlemen, we see PPSP as a resilient operator. It is undeniable that the unprecedented border situation and maturity phase has captured its limited upside. However, with a stable baseline demand, strong business potential, strong governance, and a convincing financial and valuation projection, we urge investor to hold on to this investment profile. And to win the next cycle, we recommend a 3-point execution: grow the recurring revenue, acquire new land, and shift exporting partners. And that is how we change from solid ground into a sustainable upside. Thank you.
Thank you, Tim Bay, for your insightful presentation. We will now begin the 12-minute Q&A session. Tim Bay, please remain at the center of the stage for judges' questions.
Hello. Thank you so much for the team for the full presentation. I have a question on you can see revenue structure. So it mentioned here that the Royal Group oil-backed SEZ is going to be short-term disrupted. I was just wondering, how do you account for that within your model, within your recommendations as well?
Thank you, Judge, for the question. My name is Solang, and I'm happy to answer this question. Could slide go to regarding the revenue model, PPSP revenue mainly, like in the past 12 years, it is driven by the land sales. However, in 2024, it has dropped. Land sales has dropped significantly. So now the revenue is focusing on the recurring revenue streams, and especially there's three recurring revenue streams, especially the build-to-suit factories, which is in rental income, and then they're supported by the two other revenue, which are the rental services and the construction contracts, which is supported by its subsidiaries. Yes, with the oil-backed SEZ that have been disrupted, we believe that it has capped the upside, because right now, if we look at the 3 SEZ that PPSP have, in Phnom Penh is already mature, and in Kandal it has limited capacity, as we have already visited the site, and we can see that more than like 90% of the land already occupied. And so PPSP is now focusing on the oil-backed. But then from July 2025, it just happened with the border uncertainty. So it heavily affected the whole company operation, and it really kept up the upside. That is why we offer the whole recommendation. Thank you.
To follow up to that, have you considered the possibility of restarting or resetting the operations of oil-backed into the model, or like the entire analysis?
Yes. So regarding the oil-backed SEZ, we have interviewed the CEO and CFO of the company, and we got the information that the group has been shifting its focus from the oil-backed, and now try to gather the land acquisition around Phnom Penh, which is more safe and less risky. And so this is how the group is mitigating. And especially another point that we caught with the CEO and CFO as well is that the group is now focusing on, like, after the group acquiring the more land, they really focus on the recurring revenue stream, which is the build-to-suit factories that offer most profit margin. But it is adaptable, depend on the tenants' needs as well. Yes.
Hello. Thanks. Great presentation. I guess it was a bit fast, so I guess my question would be, what is the key driver in your assumptions that if it changed either up or down, that would shift your recommendation to either a buy or a sell? So in terms of your investment thesis, what is the key point to get across?
For the question, my name is Ishi, and I would like to take these questions. So the main key driver that would shift our recommendation to a buy to a sell would be the land sale, because the company main revenue stream right now is land sale, and as of now, the company does not have more land to sell, and they are planning to acquire more lands. So whether our recommendation would shift to a buy or a sell, it would depend on whether the company can sell more land or not.
To add on to that part, it depends on the ability to acquire more land. As of right now, as we all know, the Boybat FCC, which is their future plan, is heavily disrupted due to the border tension. Therefore, they are looking to acquire more land 2 hours radius of Phnom Penh. So if the company is able to acquire those lands, they will be able to address the risk that we mentioned in the presentation earlier. If not, as of right now, they are slowly building their recurring revenue model, which suggests that the company share price value will be more stable, like our recommendation.
You understand? Considering
Thank you for your question. May we have a bit of time to discuss with our team? Okay. Can you please restate the question?
so we understand
Thank you for your question. My name is Romina, and I would like to answer your question. So, when forecasting the revenue segments, we accounted the vitality of land sales by since the company is now shifting their focus on recurring revenue. So we are more focusing on those segments like rental, service render, and construction. For rental income, for those revenue streams, we forecast them as based on the future rental project, construction project, and services. And since now they are more like shifting their focus to the build to BTS model, it contribute more to their revenue rather than land sales. As for land sale vitality, since PPSP is now reaching their maturity, and also the availability of the lands and the utilization is also high. So we expect that there will be still a little bit growth because land sale revenue is not only account for selling land, but also leasing. But those leasing, it's for long term, around 50 years. Yeah. 50 years. So instead of focusing solely on land sales like before, they could shift their model to just recurring, focusing on more, but we do not drop land sales.
I wanted to add on this part as well. As the company mentioned again about the land sales, why we don't project it like zero land sales or something. It is because after we acquire more land, the land we focus on build-to-suit factories. We offer to tenants because we do not require tenants to have large capex. However, it also depends on the tenants that they could choose the best choice for themselves. That is why we still think that land sales still hard, but then the focus is still on build-to-suit, which is the key revenue drivers in the future.
Could you walk us through how you select peer company to compare this company with? Have you considered like peers, just companies in the country?
Thank you for your question. So in our relative valuations, due to the limited company in Cambodia, we decided to choose the peer in the neighboring countries such as the Philippines, Thailand, Malaysia, and Vietnam, based on the similar business model, but due to the fact that there are no peer that has lower market capitalizations compared to PPSP, they have the higher market cap. So we only use the relative valuations as a benchmark.
Question on ESG. I see that you did a lot ESG. I want to know when you do the your analysis, have you incorporate regulation change into your downside scenario?
Can you repeat your question again?
You did an analysis on ESG factor for this company. Did the scenario analysis, have you incorporate regulation changes that might affect this company into this downside risk scenario?
For that, we haven't considered ESG into our scenario analysis. In the scenario analysis, we only consider the drop and the increase of the revenue.
I would like to add on that. The ESG, we do consider the changes in regulation into our score, which we have seen a very much improvement from the previous year. However, the changes in ESG would not directly affect the whole valuation, but can mitigate risk in the future for the company.
They have many companies inside of PPSCZ in terms of intercompanies, related companies. And I'm wondering what kind of analysis you've done, if any, that might affect the valuation on the way that they move money back and forth between the intercompanies. Two companies. Yeah, so PPSCZ has got many different companies, right? Yes, we agree on that? Okay. And so these companies are all related. Basically, one person signs the check, right? So how have you evaluated the effect of the valuation or the price of the valuation? Did you include that as a consideration? No?
We have some time to discuss it. And yes, the quick answer is no.
Please remain on the stage.
Yeah, great job. Good participation by all the team members. I think you did a good job speaking clearly, and there was a lot of enthusiasm. I think my main feedback would be there's way too many slides. You went too quickly, so I would keep it to just a lot less slides. Think through what are the key points. Talk a bit slower. And really get us engaged in where your thinking is, investment thesis, just on the key points. But overall, great job.
I would can mark overall I think it's a good presentation. It's a little bit fast, so it would be great if you dive deeper into the points that for us to understand. But overall it's a good analysis.
I think I have anything to add besides the points that all the judges have asked for. The main point is just talk slower. Your effort is really show commitment that you this project. Congratulations.
Overall, very good presentations. Very good dress up. The colorings changed. The yellow ties are very good. Very similar to other judges' comments. I go a little bit pretty fast, and I would want to hear much more on the financial analysis part, whereas the points is heavily giving toward, but overall, yeah, very good.
Thank you, Tim B. You may now relax and enjoy the remaining. Next, please welcome Team A to the stage. Team A, the floor is yours.
Testing, testing. Testing, testing.
Good afternoon, related judges, member of the panels, ladies and gentlemen. We are Team A from NIM International College, and we will be presenting our equity research on PPSP. PPSP is one of the leading operator of special economic zones in Cambodia, attracting upside potential. We issue a buy recommendation on PPSP with the target price of 2,563 reals, implying 23% upside gains. Our valuations based on the blended approach with the DCS at 70% and CCA at 30%, supporting by three key investment theses. PPSP business models has evolved significantly in recent years. Historically, PPSP has generated a large portion of its revenue from one-off land sale. However, starting 2024, the company has made a strategic shift toward a more recurring revenue. Focusing on rental and zone-related services, this transition reflects a deliberate move to improve earning quality, strengthen long-term tenant relationships, and enhance cash outflow predictability. As a result, PPSP positioning itself for more sustainable growth with a long-lasting value for shareholders. In terms of competition, PPSP has gained a benefit from its strategic location and comprehensive services, making it the only SEZ in close proximity to the capital, while other SEZ exist across Cambodia. PPSP prime locations and tenants-focused approach give it a strong competitive advantage.
So this is our first thesis of the investment summary. So our first thesis is mainly focused on the China plus one trend. So PPSP is the direct beneficiaries of the high value manufacturing specifically, and it's playing a role as a significant peers within the Southeast Asia. And additionally, as we can observe and see nowadays that multinational companies around the world, they tend to diversify away their industry or their factories from China. And in Cambodia, PPSP playing a role as a most preferred destinations for the higher complexity manufacturing, particularly to the electrical and automotive assembly. And as we show in the left chart here, about 63% of the total capital invested come from Japan and China. And these are not labor intensive or low margin tenants, but PPSP instead they trying to attracting the high value manufacturing, particularly to the electrics and automotive assembly. And in addition on that, the industrial deepenings in which that it's aligned closely with the National Pentagonal Strategy Phase 1, in which that particularly to the fifth pillar, which is technology, in which that growth drive Cambodia towards the Industry 4.0 manufacturing. And as a result, we view PPSP that it's not just an industrial landlord, but at the same time, it's playing as a big platform that it in a global manufacturing reallocation trend.
Moving to a second thesis, which is talking about strategic pivot to recurring revenues. This slide highlights PPSP strategic shift toward a recurring revenue model. By Q3 2025, PPSP generate 100% of its revenue from recurring sources with no contribution of land sale, and the revenue mix is well diversified and led by three services. By looking ahead, as shown in the revenue projection chart, PPSP recurring revenue is expected to grow at a 6.5% CAGR from 2025 onward. And this growth assumption is consistent with our past performance as PPSP revenue has grown, historical growth, and declined gradually. So the forecast also reflect the management focus on expanding rental capacity and the service offering rather than the accelerating land sale.
So our third thesis investments focuses on the future expansions and capital disciplines. When we say investing today to unlock tomorrow potential, we're referring to PPSP discipline CapEx cycle. We expect PPSP CapEx to rise and peak around 2026 to 2027, driven primarily by the expansions and operational development of the new Kampong Thom SEZ. While the increase in spending will result in the near-term cash outflow, it's a strategic investment that lay the foundation for the capacity expansions, onboarding new tenants, and enhance cash and generating a more recurring service-based incomes. From 2028 onwards, PPSP CapEx is projected to normalize, supported by the strong free cash flow generation. This disciplined approach gives a long-term value creation for the company, balancing near-term investment with the sustainable growth over time.
So the ESG score is 600 with social at the top pillar, improving governance and the weaker environmental dues to the renewable have not yet shown the result yet. So environmentally, the water is complex. It's the closed loop water system achieved a zero disruption with full compliance in 2024, while a $10 billion green bond funds a wastewater systems adding the capacity despite its execution risk. So performance is strong. It support about 51,000 jobs, full wage compliance training, and as well as the service percentage of women are working in the senior management above target. Governance, the controls are effective. There are one female senior management as well, while the greater board independent remain key levers to reduce risk and strengthen the investor confidence. Overall, ESG are the support the
operations stability and while governance and the renewable as the potential upside.
So moving on to our valuation method. So we derive our target price of around 2,563 real per share. And this using the brand approach is the combinations between the DCF model and the CFA model. And we assign the weight to the DCF model and the other remaining is the and beginning with our DCF model, we value PPSP the FCFF model. And our assumption here is to fix the normalized operation rather than a peak cycle performance. And we apply a 12.9% max, 0.5% terminal growth, which is bounded by the long-term real GDP growth and inflation is expected and forecasted by World Bank, ADB, and IMF. And despite that this rate is below the Cambodian historical growth, but we try to ensure that our valuation doesn't heavily rely on the aggressive perpetuity assumptions. And under these assumptions, we our DCF still a fixed value, which is 2.6k real per share, and supporting with our sensitivity table showing that the PPSP remain undervalued across a wide range of discount rate and terminal growth in various scenarios, and most of the output appear to be above the current market price, which is around 2,080 real per share. So in terms of our relative valuation, we use a CCA model or a comparable company analysis. So within this model, we selected 5 peers, and those 5 peers are selected based on the investor estate as operator, have an exposure focus on the Southeast Asia, and importantly, the manufacturing ecosystem. And as you can see, which in the left chart here, show the good DE ratios of the PPSP, in which that it's 25.8%, which is the lowest among the 5 selected peer and well below the industry. And this conservative capital structure show us that its PPSP use the financial risk and at the same time strengthening and enhancing the economic. And back to the EV and EBITDA last 12 months, it showed that P trade in at just 5.2 times, and the combinations between the global leverage and the counted operating multiple show us that the valuation gap is not driven or determined by a higher risk. And we believe that this valuation gap is the market recognition rather than fundamental.
With the regard of PPSP investment risk, which we define the most 3 effective risks. First, industry competition. Cambodia has many SEZ, and the nearby country offer similar incentive. So PPSP mitigate this risk by mitigated through its prime location in Phnom Penh and ongoing investment in infrastructure, which help retain and attract for tenants in long-term tenants. So the second is supply chain disruptions. Global logistic issue can raise cost and delay reduction for tenants, which is can affect to their logistic. And also with this reduce this risk, PPSP reduce this risk with strong support transport assets and logistic support with in order to improving their business reliability. Finally, exposure to trade remain a key market concern, and trade tension, particularly between the US and China, have led to the higher export tariff to affecting some Cambodian manufacturer. So to PPSP to address this issue, they can provide or to address this, PPSP can shift its tenants with strong high-tech and value-added industry in order to save more and in order to with less sensitive to tariff and more more diversified to global market. So to conclude that, we issue a buy recommendations with a target price and upside gain of 23% with our base 3 thesis supporting. So thank you everyone for paying attention.
Thank you, Team A, for your presentation. We will now proceed with the 12-minute Q&A session. Please stand at the center of the stage for the judge.
Because it, can we discuss a second?
Thank you so much for the question. So based on our conservation on the historical data of PPSP, we see that the construction contract always contribute to the revenue of PPSP. That's why we think that it's part of the recurring revenue.
Hello. Just to follow up on that question, have you done an analysis on that recurring revenue portions? What is the historical?
Have conducted kind of observatory gains to the historical recurring which that we move to try that we try to share and past 5 years and also forecast forward. As we can see and the discussion, there's an observation that of the recurring revenue up right now and portions of fluctuation of recurring not very much compared to revenue as a whole.
So if I look at that chart, I can see that the recurring revenue has been pretty volatile over the 5 years. So what is the assumption led up to the 5%?
Thank you for your questions. Based on our assumption and valuation, so we decide to choose 6.5% because based on our based on PPSP historical growth as sustainable and also based on the industry outlooks, we can assume that the CAGR is 6.5% of the recurring revenue.
So thank you for the structure that then behind why we choose price value to last 12 months. Why? Then that we don't choose the because in the when we analyze ratio, it's like tax incentive, like many more interest. So within this criteria, because of body has according to investment on enterprise tax to SEC companies. So we believe that we use the EBITDA, make sure it's in alignment with our assumptions during revenue, and believe that if that for the EBITDA, it doesn't affect to variable that we actually we have analyzed and observed other multiple like enterprise value ratio. But what's the on management thanks to valuations?
Just one question. If you have more time, what other component would you want to share with us? Add more information into this valuation. Want to know whether you've considered any downside risk to your evaluation. Downside risk analysis.
Based on justifications regarding the additional make us see witness downside. So I would say that like we will conduct investment risk to a deep dive multiple circumstance that would affect to case that we in addition on that we also showing and studying critical company facts how we can after
Thank you for questions. Our team decided to use FCFF instead of SCFE because we think that it is somehow related to the EBIT, net operating and capex that is directly related to the cash flow and revenue of PPSP, and it is more reliable and something that we can access to the data more easier for us to do the valuations for the PPSP.
So regarding to your second question on that of EBITDA ratio, so what kind of, I would say that based on our analysis, show financial of us how the company can show profits investor who buy. So you can repeat. Thank you very much. Thank you.
I to put into this presentation, see, touch a bit on, but I would see in that scenario.
For me, I think appreciate the effort and I think the presentation is pretty clear. Get across. For me, I think it would also make focus a little bit more on the financial analysis, especially going down, dig deeper.
Yeah, thanks. Nice presentation. I think you had a decent number of slides. There too many. And good involvement from the team. I think maybe it's good you kind of broke it down by key investment themes, but perhaps you can provide a better summary in the beginning to kind of frame the overall presentation. And then I would agree with Mokeng here in terms of really kind of maybe then diving deeper into some of the key assumptions that are driving your valuation and those key investment themes or theses that you discussed later in the presentation. So in general, yeah, good job in terms of talking about the investment thesis, but maybe we need a bit more details on what's driving the key assumptions.
Thank you. As I said to the other one, it always takes courage to do these kinds of things. So well done. I think for me, I would have liked to have seen a lot more emphasis on the valuation and the financial. Some of the other judges have indicated. I felt you spent a little bit too much time talking about ESG, talking about the background of the company and so on. We just want to kind of get to the heart of what we want to do in terms of the valuation. Thank you.
Thank you very much.
Thank you, Team A. You may now relax and enjoy the rest of the presentation. Now, let's welcome Team D to the stage.
Investment decision require discipline, and in the case of RTPPSEZ, that discipline leads us to buy. Honorable judges, distinguished guests, ladies and gentlemen, we are Team D, and we are going to recommend you to buy RTPPSEZ stock. This is the overview of our investment summary, and there are 3 important and also 3 key points that we have to convince you to buy. There are 3 investment theses. First thing first, it's the earning volatility of PPSEZ is that the earning volatility of theirs is kind of reflect on their land sales timing rather than their structural weakness. And second is their value mispricing. It's the current valuation. The current valuation of PPSEZ. It's more of like the long-term asset and cash flow potential. And last but not least is the execution. It's more execution and also the phase land monetization support our stance on buying. To move on to their business overview, PPSEZ is not just a land developer. They are the infrastructure platform that enable the foreign manufacturer and foreign investor to come to Cambodia to enter the markets quickly with the access to land, to utility, to logistics, and also the government service. They control over 357 hectares of lands strategically located near the suburb in the suburb of Phnom Penh, and also there are over 80 international tenants that are that RTPPSEZ they host nowadays. And there with the current situation of the increasing need of the land becoming more scarce. So the asset is increasingly becoming more in demand. So to support our team recommendation on buy, my teammate will now walk you through.
Export. One of the key foundation or key essential to help a country's growth development and in terms of income and as well as future development as well. So, and this also applies to Cambodia as well. This is where special economic zone plays in. So as of 2024, there are 26 operating special economic zones hosting up to 745 investment projects with a capital of 8.9 billion USD dollars. And in addition to that, special economic zone has contributed to employment rate as well by employing more than 180,000 employees to help with their manufacturing zone and production. But also with this expanding industry, the special economic zone industry, what makes RTPP SEZ stand out so much? So these are the three main things that make PPSEZ stands out. First would be strategic location logistic advantage. As of now, PPSEZ is located on the National Road 4, which is our country's Cambodia main logistic zone. And it also has direct access to many other ports such as Sihanoukville Port, Phnom Penh International Airport, and Phnom Penh Autonomous Port. Second would be integrated infrastructure, which has reliable energy, dependent water supply, and telecommunication connectivity. They have fully integrated, fully ready, all for the investor to fully use their tenant, their infrastructure. Last but not least, with one side on-stop service. This service right here streamlines the reliability to help them connect with in terms of documentation, in terms of business licensing, import, export, customs, labor, and regularity for the simple business documentation. And with all that being said, let's move on to financial performances.
Now let's look at first at the financial performance of the company by first looking at through the profitability ratio. So in what we see in this graph is that it's not more of like a growth, but more of it's not more of like a gradual growth, but more of like a spike. So in 2024, the margin were to increase sharply due to the company that sell the land at a really high margins. So this may seem impressive, but it's also important to note that the growth itself is not something that were to occurring years to years. And as of 2025 onward, after the spike, it started to stable itself more or come down and settle at a stable level, which indicate that the business were to gradually shift from the land of the sale and move towards a reoccurring of the leasing income. So here's the twist. Profitability ratio in 2024 seems strong. Yes, it is strong because we expect it to be increased due to of the land sale, but its liquidity is actually deteriorate. With the DSCR were to fall below 1, which indicate that the land sale were most of the cash that were generated from the land sale were not able to collect it fully. So which means that the company profit profile may looks good, but it may have a risk in cash delay as well. But the good news is that from 2025 onward, it started to stable itself because of it started to stabilize itself with the DSCR starting to increase higher than 1, which indicate that once cash inflow started to pick up as well. But why does this happen though? Because in 2024, DSO has increased to reached to over 939 days, which tell us that the land is sold on the installment plan. Therefore, the profit were to increase in the upfront, but the cash were to slow down itself. So as leasing become a larger part of the revenues and cash collection become more predictable, the DSO also started to stable as well. So overall, the land sale itself boosts the profitability of the company in short term, but stretch the cash conversion. So this trade-off is show us of how we need to know more about risk and valuation.
Easy is actively integrating sustainability in its strategy through a 41 billion area of green bonds to support green infrastructure such as wastewater treatment plants and other sustainable facilities. The company maintains its strong commitments to environmental as it supports it with zero violations of environmentals and potentially make its way through an emissions and energies initiative in the future to support its tenants, as well as aligning with Cambodia's climate target. PPSEZ support local community such as PPSEZ support local community through multiple job creations, programs, and donations. With the governance, PPSEZ is led by 7 board of members, which indicate a strong governance and as well as to enhance ESG transparency, to improve in the futures, and with a stakeholder protections, as well as with the minority of shareholder right equal. With the overall score, ESG is 59.7 out of 100, and it's indicate a moderate performance. Given its sustainable growth and potential long-term upside in the futures, we recommend a buy for PPSEZ with a target price of 2707 Khmer with a target with an upside of 29.5%. Thank you.
Thank you, Tim Day, for your detailed presentation. We will now begin with the 12-minute Q&A session. Stand at the center of the stage for the judges' questions.
Okay. Thanks for the presentation. Nice job. Maybe the first question would be around, you go back to that slide, maybe you can walk through some of the key assumptions in your financial analysis that is driving that upside of 29.5%. I mean, some of the, and maybe can you tie it back to your investment thesis in terms of short-term revenue volatility, current valuation appears fair, and gradual land sales? So walk us through some of the key assumptions driving your valuation. And also, can you touch on what the Monte Carlo simulation does for your buy recommendation and how it reinforces or provides any value to that recommendation?
So thank you for your question. To answer, we will first start off with what is the key driver for our upside to this overall valuation. So this we notice a pattern in their historical performance where there is a reoccurring upsides of revenue in their service and tenants reconstruction tenants components, and all of these are we base our assumption on those key drivers, especially with their new short catalysts in the making with their sign up with the new SEZ. We would overall a conservative prediction to it being a reoccurring like revenue stream. And the second question to would be the Monte Carlo simulation offers a creditable support for our target price where its outcome with our variables inputted, the three variables being cost of equity, cost of debt, and terminal growth rate. We take that and then randomize the outcome for the price, target price, receiving an approximate 39% above a target value, which is above 2,707 Khmer Reals per share, pricing per share.
Can you walk us through a little bit more about your expectations of the company's operational performance? Because I see here there's analysis on like EBITDA margin and other ratios, but I think it's missing the top line analysis. So what's your expectations of it?
Thank you, judges. Would it be okay if we take a few seconds to discuss with our team? Apologies. To answer your question, our expectation for the company's overall revenues assumptions is that we base it on the conservative sides where we assume that the company slowly grows their assets, their long-term assets, making their overall long-term assets revenue high in the future.
I would like to add on a bit. So I did mention about in 2024, there is a land sale of the company. However, in 2025, there's no district information whether it's or not there is a land sale. That is why it's the DSO with the 939 day indicated that the land sale, the cash that we're to receive from that land sale will slowly. So our revenue projection also indicate that from 2025 onward, it's also increased. It's increased, but it's increased in a solid state.
So to answer, so to answer that question, there's the significant increase in price is due to their land sales in their first quarter report, where they stated that the land has like have given. There is like a major purchase in land in the first quarter of 2025, where it a sales in land in 2025 in their first quarter, where it drives the revenue up above 2024 cash flow. And the rest is the rest of the quarters are given with their values, supporting adding its overall value to the first quarter, making it like their cash from their land sales, and their other three components to drive the cash up compared to previous years.
Question is, how do ESG factor influence their competitive advantage? And have you factored into your evaluation?
Thank you for your questions. As for ESG factors, it is not directly affects to our recommendations. However, it is directly influence the non-financial sectors instead, as it's received an overall score of moderate performance. It's mean that it could indicate that ESG is an ESGs of PPSEC is in a growing status in the futures, that it could lead to a sustainable long-term growth as well as a long-term stability that support out by recommendations. And for its scores and its factor, I did not it in like we did not include it in the valuations, as it affected on the non-financial side.
You explains yeah.
May we have a few seconds to discuss this?
Thank you for your question. To answer how we chose our peers for this overall to support with our relative valuation, we use the help of with Bloomberg Terminal to help find a company that is working within like the same the industry and sector, where their capitals aren't as different from one another, but overall the peers are allocated from the terminals with that in mind.
Great job. Comments now. Nice job. Yeah, it takes a lot of confidence to give these presentations, so you did well. Maybe in terms of things to improve going forward, it would be great if you could provide, maybe package your thoughts or takeaway, align that to recommendation or investment thesis in terms of earnings volatility align necessarily with your recommendation, and maybe you can talk maybe a bit more about those key assumptions that go into your valuation. So would like to see a bit more on what key assumptions are driving your buy recommendation and that upside potential. Yeah, Mr.
Thank you. Yes, it takes courage to do this, so congratulations. I'd like to mention at least you had a little bit of animation, which I know it takes time to do. I do that as well for my slides at my companies. Thank you for that. And I agree. I think there could have been a little bit more analysis and a little more emphasis on your investment thesis and conclusion.
Thank you, team, for the presentation. Appreciate the effort. I think I have the same comment. It would be great if you could provide this on the things that you put up there, and then also aligning all the reasoning for the so that it can support recommendation. And then one other point, I think it would also be good to provide a little bit more verbal explanation of graphics, some of the graphics on.
I think you guys did a great job on this material. Oral. But my recommendation would be consider the risk factor, because walk outside should be considered. That should be.
The comparable part. Years when
Thank you, Tim D. You may now relax and enjoy the rest of the presentations. Now let's welcome Team C to the stage.
non-manufacturing, electronic. To further understand PPSP, we first need to see what shape Cambodia the market is highly concentrated among few dominant players. This is evident in the export market share, with Single Wheel taking 28% and PPSP taking 20%. Cambodia as easy market is facing significant capital requirements. Needs to secure at least 50 hectares. So what strategy is network-driven customers. And beyond strategic location, by further leveraging the integrated infrastructure, PPSP achieved a very high satisfaction score from tenants, local communities, and workers, reflecting strong confidence in the zone operations. And this, along with PPSP long-term strategy of fostering tenant the company also showed towards sustainability. Using the definitive ESG methodology, PPSP achieved an environmental score of 2.7 out of 4.5, driven by a sustainable initiative and a $10 million green bond issuance. However, high energy consumption and Scope 3 emissions remain key environmental challenges for PPSP. PPSP achieved 2 out of 2.5, engagement and CSR initiative. However, low female representation at senior level slightly impact the overall social performance. While for governance, we achieved 2 out of 3, supported by a timely disclosure, a majority of non-executive directors, and a clear shareholder rights policies. However, inactive or certain committee and chairman absent from the meeting limit the effectiveness of the overall governance. Therefore, this led PPSP to achieve an overall ESG score of 6.7 out of 10, reflecting solid performance across environmental, social, and governance. In addition, the company also aligned with 6 UN SDG, reinforcing its commitment towards sustainability and supporting its reputations as a greener and more responsible SEZ developer. Now, it's time for us to explore how PPSP shifts toward recurring income enhances its earning qualities and values. Historically reliant on land sale, PPSP has strategically shifted the focus toward diversifying its revenue stream, reducing dependence on land sale transactions and building more stable recurring income. And this shift is supported by a build-to-suit models, reflecting PPSP's success in diversifying its revenue stream. And this transition has also driven a notable improvement in PPSP ROE, which is approaching the industry average, while its ROIC has already outperformed the sector, reflecting revenue efficiencies and operational effectiveness. In addition, the company also continued to improve its profitability, with EBITDA and net profit margin at 63% and 30% respectively, reflecting operational recovery and sustained growth. And last but not least, PPSP also continued to improve its cost efficiencies, as we've seen in the declining cost of sale. Moreover, despite the fluctuation in land sale transaction, the asset turnover remained close to or above the industry average, reflecting the operational resilience and PPSP's success in diversifying its revenue streams.
Our buy recommendation is based on a multi-stage DCF model using a free cash flow to equity We also perform a bull and bear analysis, adjusting key revenue and expense driver. We also perform a bull and bear analysis, adjusting key revenue and expense driver, of which our bull case scenario project a 92% upside, while our bear case, the downside risk is limited to only 25%. This favorable risk and reward profile further support our investment thesis. In addition, to test the robustness of our DCF analysis, we also, we also perform a sensitivity analysis to test the change in the external environment, of which we adjust the change in the cost of equity and terminal growth, which show a limited downside risk despite unfavorable assumption. In addition, we also perform a Monte Carlo simulation, of which after 10,000 trials and adjusting 5 key variables, we reach the result that there is a 97% probability that our target price is higher than the current market price. Further support again our recommendation and its growth potential. Last but not least, in addition to the DCF, our recommendation is further reinforced by the relative valuation against 7 peers in the region. The PE multiple indicating that PPSP is trading at a 35% discount, signifying a significant undervaluation comparing to the market. Now, despite the company's exceptional performance, we have identified 3 investment risks. First, the potential increase in the export price but due to the tariff can delay current tenant expansion and also new land demand. Secondly, limited land availability can also drive up the land price, which create the pressure on margin after input cost rise. Last but not least, land sales at PPSP are inherently volatile by nature. So demand fluctuation can cause earning volatility from year to year.
The opportunity is here, and the time to invest is now. Thank you, and we open the floor to any questions.
Thank you for the presentations. You have mentioned that they have shifted to build-to-suit models.
So thank you so much for the questions. I'm happy to take this question. So if we look at the mandate of the business strategy, so right now the company is trying to boost the recurring income. The first strategy is to grow, is to strengthen the BTS model. So from this, they want to use this as the incentive for the tenants in order to conceive PPSP first, because they provide the build-to-suit for the investor if they want to come to Cambodia. And in addition, they also enhance its integrated infrastructure and also the ESG alignment. So right now, if you look at the infrastructure in the appendix slide, the infrastructure they offer more than as a normal SEZ developer. They also have its own utilities. They also provide administration support, also facilities such as the restaurant as well as the other workplace support. And combined with this, if we look at the ESG alignment in the appendix in the green bond, they also consider that, they also acknowledge that ESG right now is not an optional, just like what Ms. Ratana mentioned earlier. It's not optional for the investor. It's their first choice to consider to minimize the environmental risk and also to ensure the regulatory environment. So in order to attract the investor and build more recurring income, they also issue a 10 million green bond and also expands their water treatment plant to 10,000 cubic meters in order to know that in the PPSP, it's not only about you come to Cambodia to operate your industrial facility, but it's you come and then you enjoy the FDI and grow, enjoy the macroeconomic performance as well as the integrated infrastructure. Thank you so much.
Since when did they implement the BTS models? In what year?
So
Thank you for the question, and I'm happy to take the question. From their disclosure, we're seeing that the company is trying to expand into BTS model starting from around 2018 or 2019.
Have they been successful since then?
For now, if we go to the main deck at the increase in the recurring income, we can see that from that time on, we can see that the revenue of the recurring income such as rental, construction, and service rental have been increased steadily throughout the year.
Great. Thanks for your presentation. I think you guys did a nice job. So, in terms of your evaluation and the key investment thesis, maybe can you highlight what is the key driver of your investment thesis and how that translates into the 25% upside? I didn't see too many forward projections in terms of, you know, margin expansion or revenue growth, or you mentioned costs in your key drivers. So can you just discuss briefly what really is the key driver for the upside potential for the company, and how does that translate into your assumptions?
Maybe have a second to discuss with the teammates.
Thank you so much for the question. I would be happy to take this question. So one of the key drivers that drive the revenue and our upside, firstly, is the macroeconomics, as we mentioned. Macroeconomic included in our thesis. So so the Cambodian government has been trying hard to bring in the FDI by offering attractive incentives such as the QIP incentive and tax exemption, and this would further attract FDI to Cambodia. Moreover, in the SEZ sector, we can see that Cambodia has the lowest warehouse rental cost compared to other countries such as Vietnam and Bangladesh, and therefore investors would come into Cambodia and invest in SEZ.
And to add to my teammate point, according to the FDI growth and government incentive, we attract more than government, especially in the automotive sectors. And as we already know, in the appendix slide of the tenants of the PPSP, mostly the tenant is not in government, but they in beyond the government, like manufacturing. So with these incentives, Cambodia will be able to attract more tenants besides government, such as automotive assembly, that is the first major tenant in the PPSP. And according to this, with the integrated infrastructure, ESG alignment, and also the strong reputation of being one of the first SEZ developer in Cambodia, if we go to the appendix of revenue projections, we apply this into the growth of other recurring incomes to reflect their business strategies of increasing recurring income with their build-to-suit models. And for the land sale, we follow the conservative approach by maintain the historical trends of the land sale taking more proportions of the total revenue roughly every 2 years.
So I would like to add up that so in conclusion, like the key driver we believe is that the key driver that can drive the company upside is part of the increase in the recurring income. As we look at our appendix for our what if scenario, we also perform a stress test of what if the company have no land sale, at which we show that even without land sale, we still can see a 7% upside, which is moderate given the company current profile. And in addition, for now, even though we expect in the most extreme condition like that, we still expect the company to at least achieve land sale for some time in the future, as the company have described that. As the company have mentioned that they are looking to expand their land bank, and also they expand potential feasibility study into Kampong Thom SEZ. So combined with this increasing in the recurring revenue and also with some land sale, it would be adding up value and the performance for the company. Thank you.
So I have a question on the bull and bear analysis. Would you be able to share or elaborate a little bit more on how do you think about this bear scenario?
So can I ask for the clarification, like?
Was just wondering, in terms of your bear scenario analysis, what is your assumptions?
Yes, for our bear, if we go to our bull and bear case scenario assumption, so we assume the bear case to be the terminal growth. The terminal growth due to the current situation and the uncertainty to be, we expect the terminal growth to be decreased by our current base. As we previously mentioned, 3.5% decreased by 1%, while our recurring income growth due to some situation, the growth can decrease by 3% as well. It's by 3%. In addition, and we also adjust the cost of goods sold and operating expense to be worsened by 3% as well.
However, even though we adjust this to reflect the uncertain conditions and the worst case scenario, the downside is limited to 25%. Yes, supporting our buy recommendation with the base case. Thank you.
Would you typically expect to see, all the good things and all the bad things happen at the same time in terms of revenue go down, costs go up? Or do you just take a general assumption of 3%, or how did you get to those assumptions that you use, 3% cost of sales? Or can you explain maybe a bit more on how you came up with that number?
So may we have a second to discuss? Thank you. So thank you so much for the question. So relating to our rationale behind all of this bear case scenario for the terminal growth, as we use the projected GDP growth and the weighted average of the projected GDP growth and inflation growth to calculate our terminal growth. So in the base case, we can see that because the GDP is projected to grow by the World Bank and inflation is also projected to grow, so we believe that the terminal growth would be grow as a weighted average with these two variable. But in the base case scenario, in the bear case scenario, even though there's projected growth, we reuse it by 1% to reflect in the terminal growth of the base of the bear case. And for the recurring income growth, because normally it grows at 10% if after the calculation our assumptions using the previous trend, but with the even though with the BTS strategy that they will get more recurring income from their integrated service and also the increase in the water treatment plants to provide more service to the tenants, even though we know that it's going to be increased, but we reduce it to 3% to reflect that even with more integrated infrastructure, it will reduce not 10% like in the past, so we reduce it by 3%. And for the cost of revenue, we increase it by 3% because we believe that right now, right now PPSP continue to improve its cost of sale, but using the previous trend, it's not going to be like this. But if we use the bear case, we decrease it by 3% to reflect the increase in the cost due to the recent uncertain conditions. And for the operating expense, we decrease it. We increase by 3% to reflect the operational under uncertain conditions of PPSP. As if we see the trends in the past, we just see the trends and then we use it by our assumptions.
And also I want to add on that to adjust for the more variable change, like there could be some increase, some decrease, some increase or some decrease. We also perform a Monte Carlo simulation of which we adjust various different variables, which we Each trial is each variable is generated randomly, or with the results they show at a positive upside for the PPSP.
One question from me. You did a very good presentation and materials, very thorough. You have risk, investment risk, and even probability of all of those risks. So I just want to know, if you were to argue on the sell side, what would your key point be instead of selling?
Thank you so much. I would be happy to take this question. So if we were to argue on our sell side, in this case, we think that we would change our recommendation to a sell if PPSP only focus on net sales. Their revenue stream is only net sale, because net sale, when you sell land and then it's gone, it's not gonna sustain forever. That is when we would change our recommendation to a sell. However, as we can see, PPSP is trying. They acknowledge that. That is why they are trying to diversify their net sale into a more recurring income. Yes. Thank you.
Oh, that's it? Oh, okay. So if you drive around Cambodia, there's tons and tons of non-SEZ companies. Why would people choose SEZ as opposed to in PPSEZ versus, one of the companies I used to work for, they have a non-SEZ, they have they're full of tenants. Why choose SEZ comparatively to non-SEZs? In your evaluation, did you consider that?
Thank you so much. I would be happy to take this question. So one of the first factor that investors would choose SEZ rather than non-SEZ is because of the strategic location. So for PPSP in general, specifically PPSP located at its very strategic location with only 20 kilometers from the city center, as well as a 40 kilometer from Techno International Airport, 48 kilometer from Sihanouk View, as well as only 2 hours from the Sihanouk View port. And this makes it easier for their tenants in terms of logistics. Yes.
And to add on this part, if you are not in the SEZ, you cannot enjoy the one-stop services where all of the government departments are there. And where all of the government departments are there. So if you go outside of the SEZ, it's not very convenient for the investor. And in the SEZ, you also got support from the government of labor to employ the worker for you, and if they work with the SEZ developer. Thank you so much.
Thank you, Timothy. We have now come to the judges' feedback.
Okay. Yeah, great job. It's not easy to give presentation like this, so I think you guys did well. Good team involvement. In terms of maybe some things to think about, would be around maybe presenting your investment thesis in the beginning with some of the key points, and then getting into more of the details of that analysis. I think you guys did that through a lot of slides. Maybe you could have condensed those into some key things with some of the numbers behind how you got to those that buy recommendation. But overall, great job.
Thank you so much. We definitely consider that.
Yes, thank you very much. I said to everybody, it takes courage to do this kind of thing. So congratulations to you on this. I thought the slides were nice and clean. They look great. Nice transitions. So the slide presentation pack for me, right up my wheelhouse. So thank you for that. I would agree that there probably needs to be a little bit more financial assessment in some of this.
Thank you so much.
Thank you, team, for the presentation. I think overall it's also great transition from one point to another, and then the material is also great in terms of presenting all the points, especially on the ESG things that you were able to capture the details in a clear manner. And I would also agree that there could be more focus on the analysis and especially the financial projections as well. That would also helps in formulating the foundations for your recommendations as well.
Thank you so much.
Thank you. I have no comment. You did a great job. Congratulations.
Thank you so much.
I like how you say out your names, everybody else at the very beginning, and the presentations are very clear, very good. The transitionings agree with the other judges, also very well transitions from point 1 to point 1. A little bit touched on the way you explain the positive side of the PPSP, but sometimes you're explaining something that overlaps on with the other SEZ as well. It's not like proprietary just only to PPSP. And yeah, overall very, very good point on that. Thank you.
Thank you so much.
Thank you, thank you. Ladies and gentlemen, esteemed judges and distinguished guests, we have come to the end of the research challenge for this season. And the next agenda, we will now take a brief 10 minutes break before resuming our next agenda item. Thank you.
Yeah. Well, I think everyone did a great job. I think it takes a lot of, I think Dave mentioned it the whole time, but a lot of courage to get up and give a presentation like this in front of, your peers and senior people in the industry. So you should all be very proud of yourselves. And I think the idea is that it's supposed to spark some interest in investments, and that the journey doesn't stop today, that it's just part of it, and that over time you continue to refine and hone those skills and take the CFA, be involved in different events, and it should help you in your career journey. Doing things like this is kind of going above and beyond other people in your school and your peers, so you should think about it as helping you in a long journey in the investment industry. I think in terms of, in general, things you can think about as you take that journey is around just thinking about the big picture, not necessarily getting involved in Monte Carlo simulation. I hope we don't talk about that in future presentations. But thinking about the big picture and what are the key things that would move the needle in this company, the key economic drivers, the key things the company's doing, what are the key trends in the industry that's going to make this company make more money, improve profitability, reduce costs, macroeconomic conditions in Cambodia. But think about the big picture and then take that into 3 key investment insights, and then try to use that as framing your overall presentation. And I think you can use that not only in investment presentations, but any presentation that you do for your job in the future. Try to keep it, what are the key takeaways that people should know about and should think about. But overall, great job. Yeah, keep up the good work.
I have 3 pieces of feedback to make it. I'd prefer not to do this. I think that the thing that you can look at is intercompany and group, the total group, in terms of what the group impact might have on terms of financials and valuations for the customer. The second one is I think that there's needs to be a little bit better analysis on some of the recurring income, like the leases. So what are the risk factors embedded in some of the lease income that is there? A lot of you guys spoke about the construction income as recurring income. I do risk management all day long. Construction income is not recurring income. It's here and there, as you can see with the construction industry in Cambodia in the last few years. So just something to be thinking about when you're thinking about doing the evaluations. Look at industry and think about the industry of the specific streams of income that are coming in. The other thing is that you all talk about the expansion of the business, and so I think you have to think about the impact of the potential debt or the potential money that they were required to raise to do that expansion, if that's required. So are they going to fund it with their own equity or their own cash? Like I said, there's $27 million there in cash that one of you said they were going to have at the end of last year. So are they going to invest that cash into new land? Is it going to borrow more money? What are they going to do? Are they going to raise capital? So that's going to affect the long-term valuation on the expansion as well. So that was all. Thank you.
Thank you very much to all the team for the insightful presentations and then all the effort that you put into the preparation. I know just from Ratana earlier that you've got the company meeting quite late, so I know there's like time condensed, and so appreciate all the effort. And in terms of general feedback, I think I would agree on what the judges have mentioned. One is on the consistency. I think it's good to come up with after your analysis, you have your recommendations. And in terms of the presentation, I think it's good to work back from there, see how all the points that you would be pointing out would support the recommendations. And then the other point that I would like to raise is on the financials analysis and deep dive. I would like to encourage the team to look into a little bit more what is driving the business growth, what is the risk factors and whatnot. And I think underlying that is also the ability to understand the numbers, understand what is it, what everything that you put in there you need to understand and be able to speak from the heart. So I think that is my overall suggestions. Overall, good job.
Well, I don't have any more comments to add. Actually, you should congratulate yourself for participating in this challenge, and through this you learn things, you make new friends, and hopefully you will decide to continue your journey in CFA journey. We really need more skilled people in the market, and hopefully you guys will continue to fine-tune yourself, your skills, and yeah, continue to develop our country.
I hope everyone's enjoying doing this, and yeah, I like to see you guys smile, having fun. Yeah, no matter what the results is, and trying to learn from many different mistakes. Because you know, when you are young, you can afford. You are very rich in affording mistakes. So cherish on that and trying to learn. PPSP is probably very unique compared to others listed companies in the sense that personally to me it's very difficult to value PPSP from just the perspective of DCF, because I don't know how you're gonna value a land sales portions, which is a large chunk of the business. And I don't see anything wrong with focusing on land sales when that's gonna make them a lot of money, while BTS only about 25 to 35% of the income. So personally, I would look at the land sale valuation in terms of fair value of the assets, and then plus the DCF on the recurring operational incomes, sum of the part for those two, and probably the value of the companies, I would say. And I hope you like this program. Recommend more of your people and your friends to participate this next year's. And I hope you also like this career path. Not easy, very difficult, probably extremely difficult, stress. Yeah, it's more stress when the money is on your hands. When you value things, you make decisions, and you invest, and you lost others people's money, not your money. That's very, very stressful, and you got called for. Yeah, but try to enjoy the journey, learn from mistakes, and build something yourself. Your thesis, your understanding of this industry. Maybe you're not good at this type of sectors. Maybe you're more like on a banking guys, more like an F&B guy, FCMG guys. Yeah. So along the way, I try to trying to find something that you're really good at, and so especially you really like. Develop some thesis yourself, some belief yourself, and work it along the way in your career. And 5, 10, 20 years later, yeah, you're gonna be very, very happy, and successful. Thank you.
Next, I would like to invite Bong Darachan for the feedback from CSX.
Hello, everyone. I don't have any feedback, but as a representative from the CSX, let me say congratulations to all of you. You did a great job. I can see your energy throughout the presentation. So keep going, and I hope that I can see many of you involved in this sector in the future. So I wish you all the best and good luck. Thank you.
Next, I would like to invite Mr. Pangnam for the feedback from subject committee.
Thank you. Good afternoon, everybody. My name is Pangnam.
I would like to thank the CFA for selecting us for the second time, and maybe the third time. 3 years time? Okay, basically, for me, speaking for myself, I think it's a great experience for me because I've just heard from people outside looking in, you know. We are bored in our office, you know, looking out, you know, and we don't really know what's people from outside looking in at us, what they think it is, you know. So I think very great experience for me, yeah. The other thing that I would like to mention is that the target price that you guys have been, you know, analyzing. I did a simple back of the envelope calculation. The 4 averages that you gave, we came up to a target price of 2,500 real. Today's price is 2,070, today's closing. So can you put up your hand, who will want to buy? I want to see the action tomorrow. No, actually, I'm just kidding. Huh? There is no so-called compulsion for you to buy or sell or whatever. I'm just joking, yeah? Okay? Please don't take it too seriously. Yeah. Then, of course, one of the judges mentioned a Monte Carlo simulation. I don't want to talk about Monte Carlo, I want to talk about a peer review. Because I come from Malaysia. So one of the companies I saw there is Sime Darby, you know, Sime Berhad. Or Sime Berhad, compared to us, we are just a tiny little ant, you know. So there's no comparison. There's no comparison at all. Yeah. So that's my other observation. I think I'm open for your questions if you want to ask me anything about PSP. I'll try my best to answer it. Any questions? Don't ask me whether to buy or not to buy. I cannot tell you. Okay? Nothing, huh? Okay, I better escape myself now. Thank you very much. Thank you.
You can say a few words. Oh, okay. Just a few words. No, first of all, congratulations, to all of you for all your efforts. And I think that we know how difficult is the exercise, and you definitely, take the challenge and go through it. And therefore, we would like, to thank you for that because we know it's not easy. Great job to all of you. We know, and we must say that this year was a little bit particular because we had a few challenges, and we need to recognize them. Few challenges, to lead, for you to a little bit less preparation. And we know that, and we know also that you have, all of you, done your best. And we thank you for your patience and understanding because it was not the usual conditions that we offer usually to analyze your company, where we have like a little bit more time usually. At least, I would say maybe at least 2 weeks more, right? So congratulations, to have worked, under such pressure. We know that it's usually not so easy, like in normal condition. So you did an extra effort for that, and really well done. What else? Maybe a few words about the prize ceremony. We have also changed a little bit the dates, but finally, we succeeded, to finalize a date on the 24th. It's going to be on Tribe Hotel on the last floor. We will send more information very soon, but usually it's on the from 6:30 to 9, and we really hope that you all will be able, to join us. Is there anything that I miss? No? So thank you again, and congratulations for your great job. And now, I would like, to invite you, to do the photo session, and to celebrate for you. I mean, it's done. Let's go and make a photo souvenir. Thank you.